But over next few weeks, I would expect even foreign flows should outflows should moderate sharply. Who knows? They may even become buyers. I think everyone knows that India is the world's one of the fastest growing economies. Our fundamentals have not been impacted. Our relative competitive position is improved. The fall in oil prices is clearly going to benefit us. And above all, I think the valuations have turned a lot more reasonable. India's Nifty is now trading close to 17 times calendar 26 earnings, which is reasonable even for a 10 to 12% earnings growth, which I feel is a realistic estimate. So I am constructive on large caps. However, our return expectations have to be realistic. I think 12 odd percent is a reasonable return for Nifty over 2 3 year period on a compounding basis. Small mid caps, I would still be extremely cautious. But what I am comfortable saying is if you invest in large caps predominantly or large cap oriented strategies over 3 years, I think low double digit returns are very realistic to expect. And the right way to invest in these markets would be to phase out your investments over next few weeks or 1 or 2 months. Higher earnings growth need not lead to higher returns, as we have seen time and again. So if you go back 5 years, utilities were deeply undervalued. What has been the earnings growth? Very low, below market probably. But returns have been extremely high. Similarly, you have sectors, let's say some companies in consumer, which have grown earnings ahead of markets, but the stocks have not done well. So I think as long as you don't extrapolate earnings growth to stock market returns, it is okay. So I feel uh, one, the dispersion in earnings in this market is going to be extremely low because the most sectors are making reasonable margins. Still, I feel banks, insurance companies, they should grow earnings maybe slightly ahead of markets. Telecom could grow earnings slightly ahead of markets. Even capital spending, I think, will grow ahead of GDP. The IT, the near-term outlook is mixed. In pharmaceuticals, it is more individual company-led. In consumer, I think mid to high single-digit earnings growth should happen. In automobiles, I think there will be greater volatility year to year because it's an asset which people buy and demand tends to vary year to year. But longer term, I think even automobiles should grow in line with the aggregate earnings in here.
If you like this video, then like, share and subscribe to ET Now.